Let me begin with a question for you. Is it a joke or the real fact? So, people are selling Petrock NFTs for more than $100,000 and proof of ownership to the JPG with this grey stone that Vitalik Buterin is keeping with his hands is being sold for such a huge amount of money. So all the signs on the heaven and on the earth telling us that this non-fungible token trend has evolved from a small ecosystem of collectors to an emerging multi-chain ecosystem that is staying at the forefront of a culture. But how can we take advantage of it? And what about the crypto industry by large? So today we are talking about US stock markets and also crypto. So lots of important news. Let's begin. Let's get to market mover section, and we are discussing over the gauges of a trading calendar. So today already we had GDP growth rate for the Great Britain, and we can find, I'll just extend this chart year over year. So right now, in terms of 10-year, now Great Britain gross domestic product grew by 22% year on year in the second quarter of 2021. So this sharp recovery from the worst recession in 3 centuries finally is leaving the economy only 2.2% smaller than before coronavirus lockdowns. So unfortunately for the Great Britain, this breakneck pace of expansion is likely to slow down a bit, as post-lockdown euphoria will probably fade anytime soon, and also infections of COVID are rising. On Thursday we also had PPI for the US, that is by most considered most comprehensive monthly publication on producer prices, and it turned out to get to 1% level. So this inflation is still surprising economists because a forecast was 0.7%. So this gauge that consists of such goods as foods, energy, yada yada, right now is getting out of control. In terms of earnings announcements, we had interesting data from a NEO company that has surprisingly outstanding forecast by 30%, and also Canada Goose that conversely has surprised economists to the downside by 23% and gave us a quite bearish outlook of what the company has done throughout a recent quarter. And as of Tuesday, I would like to return to in time. We had Coinbase data publication of earnings. So Coinbase has grew up 44% from the previous quarter in terms of users base, while trading volume rose 38% to 462 billion from the previous quarter. Let's now get to economy view section. We have Senate that approves a framework of 3.5 trillion budget plan that may expand Medicare, tax credits and climate initiatives. So it's another reason in order to trigger high inflation and undermine the economy, as one of Democrats, Joe Manchin, said. Given the current state of the economy recovery, it's simply irresponsible to continue spending at levels more suited to respond to a Great Depression or recession, and not an economy that is on the verge of overheating. So it's another multi-trillion-dollar spending bill that could cause prices to rise and also harm middle-income households. So will this continued fiscal support ever be stopped, or we just addicted to this never-ending stimulus? If inflation is actually looking transitory, then there will be less pressure on the Fed to quickly unwind stimulus, they say. But it's a little too early to say that this CPI's rate of recent that met its expectations level is this conclusive evidence that we can see the hit on prices to come off. The inflationary debate as of present can be summarized to the fact that if we just stay at the same level in terms of used car prices, the Fed should taper in September. But if used car prices drop back, we may have our QE extended. But there is something that also brings some more problems that just started to arise. And to this inflationary pressure may add up another factor, that is US CPI owners equivalent rent marked on black, and on green we have S&P composite home price index of 20 US city. So we can find that this black line has formed something like an inverted head and shoulders pattern that usually symbolize us that we may take off from this boundary of here. And what worse, even some policymakers like Dallas Fed President Robert Kaplan already started to change his vocabulary in terms of describing the inflationary process that's ongoing in the US. So by now he has resisted using the term transitory inflation, but is considering switching to the term largely transitory. So the government is trying by all means to avoid the term persistent, but what time will bring, this may be too disappointed to many of senators. Okay, but inflation may slow down for a while. This autumn, the Delta variant is about to knock onto our doors, and the serious situation with this kind of a virus is that whereas vaccines are showing to reduce the concentration of virus particles, Delta, however, is associated with viral loads that are more than 1,200 times higher in newly infected individuals compared with the original coronavirus strain. So that would be much more difficult in order to shift the herd immunity goal. Okay, but inflation may slow down a bit this fall because we have a Delta variant that is knocking onto our doors. And the serious case with this variant is that as we get down here, whereas vaccines are showing to reduce the concentrations of virus particles, Delta, however, is associated with viral loads that are more than 1,200 times higher in newly infected individuals compared with the original coronavirus strain. And these infection problems may bring us to some governing restrictions this fall that may slow down the consumer spending pace. So as we are going to have a decelerating, still growing economy and also inflation going to stick around, then the obvious deduction is that we are going into a stagflation. So stagflation is low economic growth that would likely lead to an increase in unemployment and the increase of price of fuel. So 1970s was an era of such rising prices and rising unemployment. That was the period of poor economic growth. And right now there are so many similarities to 1970s and the early 1980s. Transitory inflation that is proving hotter and more persistent than expected, real economic growth that is cooling, and also millions of workers that are sidelined. So the severity of the 1981 and 1982 brought us to the territory of unemployment that grew from 7.4% at the start of the recession to nearly 10% year later. So the severity of that recession was something that clearly illustrates the danger of letting inflation to get out of control. So the recession particularly hit manufacturing sector, as we also struggle with right now. But maybe there is a sign of hope in terms of getting us out of this stagflationary pressure. Fortunately for the US government, maybe the government will finally come to its senses, as we can find as much as 46 Republican senators signed a letter indicating they won't vote for an increase in the debt limit, a move that could risk the Treasury defaulting on its obligations as soon as next month. So that kind of high-stakes showdown isn't what the White House and Wall Street want to see as the US economy rebounds from this pandemic. We don't want to see US economy giving out money left and right all the time. We need to look at this real spectrum of an issue. We need to see the economy standing firmly on its feet and without any extra fiscal drips. And getting to crypto outlook section, on this chart we can find entities that possess 10,000 bitcoins up to 100,000 of them. So the amount of those units that are probably institutions are surging since 5th of July. So institutions haven't been put off by any of this negative narrative as of recent, whether it was regulatory frameworks, whether it was miners evictions and other things that should bring us into a more bearish sentiment. So major players are in fact adding recently BTC holdings and accumulating throughout this downturn. So as one of the proof, exchange balances right now are confirming this point. The derivatives platforms are seeing a similar trend to what it was at the end of 2020. But right now we need more proof in order to reverse this trend line. I would expect from this chart to form something like a double bottom in terms of exchange reserves and then climb higher. Otherwise, there are too many signs that it's just a correction of this recent slump, and we will follow another path to the south. However, adding to this positive sentiment, we can find that top 3 DeFi money markets crossed an outstanding $20 billion in cumulative loans of its protocols. So usage of money market protocols didn't really dwindle recently, even with this bearish sentiment that was hanging on the industry. On the other side of the coin, fund flows need to match the rebound. Otherwise, the recovery of the industry may be extended in time. So Bitcoin futures are right now decreasing in open interest. It means that traders are letting their contracts to roll off without renewing. So we need another massive fund flow from serious players. Not from millennials that are quitting their jobs to become crypto day traders. So we need serious flows from institutions, or just however you call it, just whales. And similar dependency has been indicated by the chart just published by Sentiment. So it just showing us Bitcoin NVT circulation model, and NVT ratio is similar to the PE ratio used in equity markets and is pointing to a network value to transactions ratio relation. So model in this particular case is pointing to a need for daily unique tokens to move at a slightly higher frequency in order for this digital asset Bitcoin to take another crack at an all-time high. So we need fresh blood in the crypto industry in order to push us to the all-time highs and further. However, there are lots of concerns around that the speculative flow of funds coming into the industry won't happen this year. Probably sometime some people claim that the biggest media interest in terms of Bitcoin price is already over this year, and it's a little too early to make another top in 2021. So the time will tell. And after some time, Polynetwork hacker just appeared to be ready to return stolen funds. So we have an update in this massive hack that happened this week, and Polynetwork hackers seem to be an ethical hacker called Whitehead hacker that is an information security guy that has obviously similar skills and uses the same technologies as a malicious hacker, Blackhead hacker, to discover just vulnerabilities of protocols and some weaknesses around the organization's systems. And hacker has asked for a secured multi-sig wallet in order to return the funds hacked and get this back to the smart contract of a victim. So also he has added a message within a transaction that it's already a legend to win so much fortune, and it will be an eternal legend to save the world. I made a decision, no more DAO. Nothing more, nothing less. It's a great, sharp explanation of his behavior. So this Whitehead hacker just don't want to have a crypto industry being accused of being packed with lots of scams around. So he just needs to return its funds to save the reputation of crypto industry. But what was the DAO? The DAO was a massive hack that happened in 2016 on Ethereum. The hack that led to a hard fork in order to save the money gathered by community that resulted in two competing Ethereum blockchains. So the DAO hack and subsequent Ethereum hard fork shook the Ethereum community to its core and highlighted also some questions about this emerging technology, whether it has a chance to survive. So this time, thanks to these Whitehead hackers, no more DAO. The time is different now. Right now, let's get to trade idea section, and I have a proposition for today that is Zynga with a ticker ZNGA. So Zynga is an American social game developer running social video game services that has been founded in 2007 in San Francisco, and it had its IPO in 2011. So Zynga right now had its problem as this reopening of economy happens, and also a recent earnings data wasn't very surprisingly good, with a tendency of slowing down the economy thrive. So Zynga right now is suffering pain from these cohorts not playing games as often after this reopen of economy happens. However, the worst might be over yet. So the mobile game developer outlined in a recent documentation that has several key reasons for this slowdown during the current quarter. However, another suggestions around the company are bringing a possible conclusion of Zynga that will return to growth this or next year. But let's look at the earnings per share for the next year. So it's estimated to be at 25%. So it's important gauge in order to consider this bet as a growth company with a nice prospect of a future price moving higher. So Zynga stock by large is within a financial condition that is not bad. We are right now trading below this mean value suggested by Guru Focus, and comparing history, the main factor that has worsened was cash to debt, that is right now looking worse and worse. However, profitability rank still is expected to upgrade in the time to come. So Zynga stock is priced by analysts as to be traded at around $12, so it's much higher from here. And getting back to the chart, Zynga is right now at the major support that should bring the price to stay longer here for a while. And as we could see, we had just confirmed this exactly point of 790 in terms of not getting of the price that don't want to get now lower. And on a 1 hour chart we can find also some buying volumes from traders or institutions. So for now I would expect Zynga to get at least to the half of this gap with a trade boat looking like this. So we can see that we have a risk reward ratio at 2.3 level and stop losses just below recent low at 7.79. So just remember about not putting lots of cash onto this trade, just not more than 2% of your trading capital, and always remember about risk management. Just put a stop loss around this area, or just set an alarm and control the risk on the time of this trade to happen. And in terms of area to trade, I would expect this price to stay longer within this area limited by 7.9 and also 8.2 in order to find this suggestion of a trade as valid. So if the price will slide just below this area or just get out of this, I wouldn't find this suggestion. And in terms of getting to this target at 0.5 Fibonacci extension, it also meets with a major resistance that was previously a support around this area. So remember, it's a short-term speculative play, but when I would like to take a consideration on how Zynga may perform in the next future, that this target may be extended even higher. So for the nearest future, this area is quite of high probability to be achieved. So this is for today episode. Thank you very much for watching. If you have any question, just put it in the section section below. Thank you very much for watching, and see you tomorrow.